Moving average, a very popular indicator. Well, a lot of people in the world use a moving average as a very important thing to study and enter the stock or index. So today I'll be talking about it in detail and what are the advantages and how to use it in the best possible way. So keep watching. Good morning, Namaskar. I am Divakar. Welcome to Bulletin Bay Bulletin. Let me just quickly take you to the topics which I'm going to discuss today. I'll begin with Nifty and Bank Nifty technicals, which are important to know before we explore it. And then I'll be talking on the global market scenario and how it can impact the Indian market today. And a broader market picture, yes, you get to know on quick sessions how things are moving on the stock market. And option chain, of course, where you get to know the support and resistance level of your stock or index. And finally, today's primary topic, moving averages. And also, I'll continue discussing on two of my favorite option strategies, bull spread and iron condor, if time permits. And so let's begin with Nifty technicals. Well, if you see here on the last week of September, the Nifty made a high of 26,300 level, and from there it started declining. Initially, it took support around 23,300 level, and you can see the big green candle here, which gave us the impression that the market must have completed its correction and resuming its bull run once again. However, we were wrong when it took resistance around this level, 24,800, and started declining once again. This time it started making newer lows, and the new low for the season was on 4th of March at 21,980 level. By this time, Nifty had lost about 4,300 points, or you can say corrected by about 14%. Well, for an index, this correction is something very big. If you can see here, by this time, the RSI indicator was at its lowest, also the MACD, and thus giving impression that the market is on the oversold scenario and should bounce back from here any moment. And that's what exactly happened. You can see the market started going up, and however, it took resistance once again around 23,800 level and started declining. This time, the market was influenced by the global market scenario on the tariff, pushed the market aggressively down and made once again a new low. This was on 7th of April, and it just broke up by a couple of hundred points from the previous low around the 21,700 level. From here, the market aggressively went up, and this time it was pretty strong and crossed the hurdle of 23,800 comfortably and went on making newer highs. Well, as of now, in fact, the market has crossed the line mark of 25,000 and at currently trading around 25,500 or so in the last couple of sessions. The market is still showing all strength in moving upwards. However, we'll have to wait and watch whether on the same rally, whether it's going to go and cross the all-time high once again, or it'll take some more time. Well, friends, let's move to the next topic, which is the global market scenario, where we look in a couple of different countries. The US is a must because it has a very big influence on the global as well as the Indian market. So if you see here on the S&P 500, it's 0.5% up, and on the Nasdaq Tech Index, it is up by 0.7%. And if you go to UK market, The FTSE 100 index is also up by 0.4%. And if you go towards the Asian market at Japan, the Japan 225 index is also up by 0.06%. And finally, if you come towards China, the Chinese market will, we always face this data input problem whenever I come towards the Chinese market. Well, till it gives, perhaps we can go to the next topic and come back and see on the SSC composite index, which is having some trouble in giving us the information. So the next topic will be on the broader market picture. We get to see how total number of stocks being traded and how many are advancing and how many are declining. When you get to see like this, which says there are 3,000 stocks are being traded and in which only 1,450 stocks are advancing and 1,472 stocks are declining, it says it's pretty neutral. And so that's how it indicates there's going to be a little bit of a flat market. I'll tell you, this keeps changing during the course of the day. Every 1 hour, if you check, it'll give you a kind of hint that how the market is placed and whether it's going to be on any one of the trending side. Well, I would like to see generally a big difference between these when you know want some kind of confirmation. The smaller difference will not make much, but the bigger difference definitely help you in taking up the view. So the next topic is, well, when we come to the option chain, if you come to the 25 400 level, you can see on the left side is the call open interest at 23 lakh versus 31 lakh put open interest on the right side. Suggests there is going to be a fight between bulls and bears on this level. And if you go towards 25 500, is having more of a call open interest at 64.9 lakh versus 46.5 lakh put open interest, suggests there is going to be a resistance on this level. If you come down at the same time at 25 300, you can see more of put open interest at 23.6 lakh versus 6.6 lakh call open interest, suggests there's going to be a good support on this level. Well, friends, this every day keeps changing, and when you try to take the trade on particular day, you need to check out how things are placed on this. So you will come to know the range. Usually 100 to 200 point is the intraday range what we get to see in most of the days. And however, when it becomes trending, and if the market is strong, none of the big strong or support or resistance will matter for the market. It will just break and go further. So this helps in normal market conditions and not in aggressive trending condition. Well, friends, after this, then we can definitely explore our trade. And let me just quickly go through how things are going to be looking when we look for a trade. So if you look at the 5 minutes chart, when the market opens somewhere here, and from the first minute, you can see it's declining. Even after 15 minutes, it shows a clear cut indication that the trend is downside. At the same time, here, if you see on the market open, the market made a couple of green candles and took resistance and came down. And again, if you can see here, there is a fantastic upward move. Now, these are the different scenarios which we get to see on everyday basis. So based on the first 5 or 10 minutes after market opening, for intraday, we should come to a conclusion quickly and look for that particular trade. So if you are bullish, I would strongly suggest to look for a bull spread kind of a trade, which I have explained in the last several sessions. And if you are thinking it's going to be bearish, you can look for the bearish trade. And so the spreads always help you in buying the respective option and also sell a couple of 100 points away the respective option, actually to safeguard your trade in more or less in a lot of level. Now let's go to the main topic of the day. Well, friends, the main topic is the moving average. So moving average, as you know, is one of the most popular indicator widely used by a lot of people, and it helps you in identifying how your stock or index is placed. Now, what is a moving average? A moving average is nothing but for a period, say, for example, 10 days. If you're taking the closing price of the stock for all the 10 days and take the average of it, and that becomes the moving average. So if the stock price on a closing basis is going up, that means the moving average is going up. And if the stock price on the closing basis is coming down, even the moving average comes down. Well, based on this, you can analyze for 10 days how your stock is placed, and based on that, you can take a trade. Now, there are different popular moving averages. They are the 10-day, 20-day, 50-day, 100-day, and 200-day. All these are represented in different colored lines in this chart. Amongst this, the orange line represents the 200-day moving average, where this is considered as the most important one. So if a stock or index is trading below this line, it's considered as weak or bearish. At the same time, if the stock or index is trading above this line, it is considered as strong or bullish. It's very simple. So if you are seeing the stock candle crossing from top to bottom now, and that is the time you take a new sell trade. At the same time, if you are seeing that candle crossing over from bottom to top, and that is the time you take a bullish trade. Well, if you can see here on the index, once it crosses here, it's never come down. It's making a fantastic rally going up all the way. So somewhere here, when it crossed on, you can see this is on 22nd of April, and somewhere around 24,000 level, this crossed here, and you can see we are on 25 and a half thousand, and still going strong. Well, that is the kind of rally or trade we can look at. It's very much same on the downtrend also. Once it crossed here, you can see it came down, it tried to bounce back, but it never crossed the 200-day. So you can still hold on to that sell trade, and went on making like this, came ban, went up. So here there are different moving average line you can see, and that comes into picture during your trade. What kind of trade you've taken, whether it's for intraday, short term, or long term, and based on that, the other indicators will be useful, and based on that, you can exit your trade which you've taken during the study of 200-day moving average. Now, when you take a trade, I also strongly recommend, if you're trading options or futures, you will be taking at least two lots or five lots and above, so that you can book in between. And if it's a stock, definitely whatever quantity you have, partial booking can be done on these kind of a upward and downward board based on the different moving average lines. Now, friends, there are a lot of additional information which will be useful, and everything cannot be discussed on a single session. So I'll be in course of time talking about this in the coming up session. So if you have any questions, you can post it on my YouTube channel comment section. I'll be happy to answer. So meanwhile, I request you to subscribe to my channel if you are not yet, and like my channel. And thanks for watching, and keep watching my videos. Until I see you next time, take care. Bye.